Hello and welcome to CMC Markets Trading Outlook for the week of January the 26th, 2015. My name is Colin Szynski, Chief Market Strategist. Our topic this week is FOMC, RBNZ, and technology earnings previews. We're coming off a very busy week where we had a lot of decisions from central banks and a lot of big changes, including a surprise rate cut in Canada, a surprise rate cuts in Denmark, and also the big new stimulus program out of the ECB. This week, there's two more central bank meetings of note. One is in the United States and one is in New Zealand. On top of this, we start to get month-end data. A lot of GDP reports for the first quarter start coming out, and monthly data for Japan towards the end of the week. Also, in addition to all of the economic news, we also have a huge week for earnings. It's the first really big week for earnings reports with a particular focus on the technology sector. So I'm going to highlight a few of the big tech companies that are reporting a little later in this week's video. I just wanted to highlight, yes, you can't see me this week. I apologize for this. I'm having a technical problem with the webcam, and I'm hoping to have this fixed and back to normal by next week. And so let's kick off now with a look at what's going on in the markets. We're here on the Friday the 23rd, and something we're seeing is continued gains in European indices. They've just absolutely exploded to the upside, particularly the DAX, which I'm seeing is looking at up 2%. Another 2% today after a big move yesterday and big rally in France and in other countries. So traders have really responded positively to the quantitative easing program that's coming from the ECB in March. They've been talking about it for 6 months and they finally delivered, and people seem to be pretty pleased with it. Interestingly, the U.S. markets are not up today. They're kind of stagnating, and I think what's happening is that now that the U.S. is the one country that has ended their quantitative easing and has still been talking about raising interest rates at some point, they've actually become pretty relatively hawkish compared to the other central banks. And that even if they didn't raise rates, they still probably aren't in a position to bring in a QE4 either, because their economy is doing pretty well. For Europeans, meanwhile, now we've got quantitative easing coming in, plus the stimulative effect of lower oil prices suggests that, and people are starting to anticipate, it seems, that European economies could absolutely start to explode over the next year. Which another way of looking at this is if this amount of stimulus between QE and between low energy prices doesn't do it, you have to ask what it's going to take. So at this point in time, though, people are anticipating things to improve in Europe. So what are we seeing here? We're seeing that the euro continues to decline. It's been under heavy pressure today, and no surprise. In fact, since the ECB news came out, clients have been becoming even more bearish with the position value is well up in excess of 90%. Flipping that over and looking at the Germany, which is breaking out to new highs, things are a little different here now. Previously, when the DAX was getting up to new highs, we would see huge increases on the short side in client sentiment and position value. Today, we're seeing it come down. This suggests to me that we're seeing a lot of people start to cover their shorts positions and back away from that, with which suggests prospects that people are thinking that the German 30 could continue to climb from here. And interestingly enough, we're also seeing this in other markets. As I highlight here, we're seeing with the UK 100, clients now are up to, top clients are up to 53% long, and the short positions on position value are continuing to decline. Similarly on the S&P 500 here, we're seeing mixed sentiment. People are still trying to decide what to do, but we have clients pretty substantially long and kind of mixed here on the short side. All clients down today, and but top clients have been shorting. So we are seeing the effect of the stagnation in the S&P 500. If we turn our attention now to the U.S. 30, though, we see that in the on the Dow, people have become more decisive in terms of going over to the long side, with both the number of clients and the position value moving pretty solidly into bullish territory for the for U.S. indices. So it looks as though people overall are at various levels of starting to shift between being bearish into rallies and being bullish, and starting to accept that these breakouts that we're seeing and advances we're seeing could be the beginning of some pretty significant moves to the upside that could play out over the course of this year, boosted by a combination of low energy prices and higher quantitative easing, particularly from Germany and from Japan. And the other thing, of course, we have to watch out for with U.S. Stocks, and in particular, we'll keep an eye on as we go through earnings this week, is this that the U.S. dollar is also continuing to explode to the upside, and as we see that could impact the earnings prospects for U.S. companies, in particular those with big overseas operations. See those profits come back at a lower translated back to at a smaller rate because the U.S. dollar is higher, and on top of that, of course, it could impact U.S. exporters. So we'll continue to keep an eye on that as we move forward. So and noting that the climb in the U.S. dollar, and something we'll keep an eye on here as we move through the week with the U.S. FOMC meeting coming up on Wednesday afternoon, and that is we've got the market is in the U.S., particularly the U.S. dollar has been telling us, and I'll just show the U.S. dollar index here, has been telling us that even though every other major central bank has gone to the dovish side, people are still expecting the U.S. dollar to remain, the Fed to remain hawkish, and we're seeing this in the U.S. dollar, where it's continuing to climb, continuing to break out to new highs. Where even at this point, if the Fed doesn't raise interest rates and it stays steady, and there's still the possibility it could raise rates this year, that even if it just stays steady, that still leaves it in a more relatively hawkish position relative to the other central banks that have gone pedal to the metal on stimulus. So we'll continue to monitor this situation as it plays out this year. The next thing is we're seeing that also showing up in some of the U.S. indices, which I'll just highlight here with the US 30 as an example. Had a pretty good run here, but look, we're starting to go sideways a little bit. We're getting lower highs. This is a possible head and shoulders top. Hard to say. Keep an eye on this 17,900. If it goes above that, it calls off a head and shoulders top. If we see it fail again, it's still potentially weak with 17,100 here as the or even as the neckline, and more support in and around here around 17,270. We still are seeing the RSI in the downtrend, suggesting that upward momentum is weakening. If we don't get a big downward correction, we could also see a sideways correction, again an emerging channel between 17.1, maybe 17.2, up to 18,120, which was the recent high. So keeping an eye on that. U.S. markets may be starting to go sideways a little bit. I just want to highlight also the Germany 30 and the UK 100. So let's start with the Germany 30 here. Is absolutely just exploded. Look at this. This is just totally taken off. Yes, it's gotten overbought, but so far that's still confirming upward momentum in terms of the RSI. If we look back here, we had a channel. This was 9,300. This was 10,100. That measures up 800 points to about 10,900. Currently seeing it trading in and around 10,650. This here, resistance yesterday, support today is 10,500. Also a round number, significant level. If you did see any kind of a trading correction, that would be your first test. And then the next one here, which is in and around 10,300 and change. Also wanted to know we're seeing a catch-up rally going on in the UK 100 off of the recent Bank of England minutes. We saw them some of the hawkish faction at the Bank of England start to evaporate, and even if again to a more neutral position, if not dovish, but at least neutral. And today we saw spectacular retail sales results coming out of the UK. And what are we seeing here? We're seeing the FTSE playing a really nice staging a nice catch-up rally here. It's broken out of a downtrend. RSI has broken out of a downtrend. Upward momentum taking off, clearing 6,800 now. The big test for the FTSE is up here at 6,900. Does it break out and follow the DAX to new highs or not? That's going to be the big test, and that's the one that we could see play out over the next week or so. Moving along now, I just wanted to do I will take a quick peek here at commodity trading. In particular, we'll look at crude oil, and today I'm going to use Brent, and we're seeing a bit of with trading here today. Basically, what's happened, we've had this huge sell-off here. We're seeing it kind of level off in this 45 to 50 area. We saw it, Brent has tried to peak above 50 a couple of times and been knocked back down, so it's not really ready to recover. But with this huge oversold situation here, we are seeing it start to level off and digest that. Now, we'll be keeping an eye, because while Brent has been occasionally trying to peak above 50, WTI has been trying to peak below 45. If we see a decisive break to the downside of 45 on WTI, you could see that decline to test 40, which is the round number, as well as a measured move. So keep an eye on that. The other thing I wanted to highlight briefly is gold. Gold has had quite a spectacular run. It's been, for the last several years, it's been following the ECB balance sheet upwards and downwards, and now it's starting to follow it back upwards again. So we've seen gold trade a really good run here, has traded up close to 1310, currently testing support back here around 1288. If that falters, this moving average here, which I believe is the 10-day, is in and around 1270. For support, and then the next upside is in here around these previous highs around 1322. We'll note gold is a little bit overbought on the RSI, and it has rolled back under 70, so you could see a short-term correction in gold while it digests the news, all the news that's come out over the last few days. Moving now to Asia Pacific, I wanted to highlight the Reserve Bank of New Zealand is the other major central bank that's having a meeting this week, and so I just wanted to highlight what's been going on with the Kiwi dollar, which has been under quite a bit of pressure lately. So last year, the Reserve Bank of New Zealand raised interest rates a full percentage point, 4 quarter-point increases, and that had boosted the New Zealand dollar. Then last summer, it intervened directly in forex markets and pounded the dollar down. And ever since then, the dollar has continued to track downward. Now, last week, the consumer price numbers came out from New Zealand, and they were actually a little bit on the soft side. So this has actually opened the door potentially for the RBNZ to cut interest rates this year. It's got lots of room to do so. Lots of other central banks have done so. Commodity prices have come way down. The dollar has come way down. And in fact, if we look in the last few days, it's taken out the bottom of that 76 to 79 channel and kept on going. Similarly, we've seen the RSI broken uptrend, turned downward and kept on going. So we're seeing some pretty serious pressure coming in against the Kiwi dollar at this point. And that suggests that perhaps some people might be starting to speculate that that there could be a rate cut coming, that even if they don't do it at this meeting, that they may start to hint towards rate cuts in 2015. Keep an eye on that, because the Kiwi dollar could be very active in and around that. Similarly, as the floor has fallen out from under the Kiwi dollar, we've also seen the Aussie dollar coming under pressure. And I'll just bring this one up briefly here. Here it is, Aussie US. And we're seeing the Aussie dollar start to break down as well. And in fact, it's actually broken the 80-cent round number and has continued to drive down. Now, similarly here, we're seeing that an uptrend in the RSI has been broken. Yes, it's gotten oversold, but it could get more oversold. So far, it has traded down as low as about 78.75. Now, it's important to remember that a few weeks back, or a couple of months, the RBA Governor Stevens had lowered the level he would be comfortable with on the Aussie dollar to 75 cents from 85 cents. So we'd seen it drift back to 80. Now that we've taken out 80, it is possible that we could see it over time work its way down towards the 75-cent level. Certainly, the RBA has indicated that they would be pleased to see that happen. So. On that basis, the 80 cent to 30 cent range that had been support may now become resistance as with this following this breakdown. Shifting gears a little bit now, I wanted to, I just wanted to mention something else here, and I'll show the client sentiment for the Aussie dollar and the Kiwi dollar before we go. So traders had been fairly long on the Kiwi dollar, but we're seeing some things start to change here. So now what we've got is on a number of clients has turned short, and people are starting to go more short on the Kiwi dollar. On this side, we're still seeing that they're pretty heavily long, but those long positions are starting to be trimmed a little bit. So what that's telling us is we are seeing a number number of clients start to take smaller short positions in the Kiwi dollar, suggesting that people are starting to think it might be going down, but the bulls haven't been completely washed out yet. On the other hand, we're looking here at the Aussie dollar. It is showing some clients being pretty decisively short on the Aussie dollar, particularly on its breakdown below the 80-cent level. We are seeing, particularly among top clients, 69% short on position value. All clients 47% short. Again, that's suggesting that we're seeing more people starting to look at this from the short side and thinking that we could see further weakness in these currencies, and certainly in 2015, at least for the first while, we could still see weakness in the commodity prices as economies transition away into a lower basically a lower commodity price environment, certainly a lower energy price environment. And on that basis, we could still see choppiness and weakness in a number of commodity currencies, not just the Aussie and the Kiwi, but certainly also the Norwegian krona, Swedish krona, Canadian dollar, and so on. I'll just show quickly here the Canadian dollar. I'll use CAD US as our example this week. And what are we seeing here? After the Bank of Canada cut interest rates, the bottom's fallen out from under the loonie, even though it's gotten oversold. It's down here now testing 80 cents for CAD US dollar, $1.25 for US dollar CAD. Keep an eye, that's a big round number test on both sides of that. For the Canadian dollar, so look at that, and we'll keep an eye on seeing what happens, how that goes over the course this week, particularly in and around the Fed meeting, because if the Fed backs away from hawkishness in any meaningful way, you could see the U.S. dollar come down a little bit, and you could see other currencies rebound. On the other hand, if the Fed says we're staying the course on raising rates, then you could see the U.S. dollar continue to climb, which would weigh on other currencies. So that's a big theme that we could see play out over the course of this week. Now, shifting gears a little bit, I want to talk to stocks, and it's a big week for stock earnings, and in particular, a lot of the biggest names in technology. So I just wanted to highlight a few charts here. First of all, we'll do Apple. Apple reports on Tuesday night. After the last earnings report, it had a pretty big rally through the latter part of October and November, rising from about $95 to just below $120. It's since dropped back and settled out a little bit. It's been trading in the 104 to 114 range, basically in a channel. RSI, though, has been showing us higher lows and is trying to peak back above 50, suggesting that the correction we did see is over. The overbought conditions have been unwound, and it is looking like it wants to try and work its way higher a little bit here. We're seeing a little bit of a breakout from a short-term downtrend here on Friday, getting back above 112. So first resistance about 114, second about 117, and then third about 120. If Apple were to miss first support in and around 105, then around $100 is a round number, and the 200-day moving average is just below that, about 98.80. Moving on now to also reporting on Tuesday night, we have Yahoo. Yahoo could be pretty significant as well. Something I wanted to highlight here briefly is we can see with this chart the pink line is Alibaba, and the red and green is Yahoo, and you can see just kind of how closely those two are actually kind of tracking together. So even after the IPO, Yahoo is still tracking Alibaba results to a certain extent. So when the numbers come out, people will probably be looking more at what does it say about Alibaba. It's been drifting lower for the last few weeks, but interestingly enough, it does look like we're starting to see here a bit of an upturn. RSI trying to peak back above 50 again. If it can hold and turn higher, that might suggest an upturn in momentum. So currently Yahoo's finding support in and around 140, and this resistance here is up and around, sorry, not 140. Sorry. This is $46, and this is about $52.75. So a few dollars on either side of 50 is what we're seeing for Yahoo at the moment. Facebook reports on Wednesday night. It's already broken out of a short-term downtrend ahead of the news. It's found some support here in and around $74. We're seeing the RSI has gone back above 50, so momentum's starting to turn upward. Its first test is here in and around 78, then up around the $80 round number, and then the previous high was just up in and around 82. So we could see quite a bit of action in Facebook around its earnings report, which is Wednesday night. If 74 were to fail, next support's around 72.50, and then down in here in this this is the 70 to 71 area. Moving on to Thursday night, we get Amazon and Google. So Amazon has been kind of choppy over the last few months. It has been drifting back a little bit here. It's trying to pick up here. It found some support in and around 288. It's back up closer to 315. If it was to break out of this channel, you could see it move up, maybe retest this high here in and around 335, 340. If, however, you do see a miss, you can see it get knocked back under 300 pretty fast, and again, this first support's in and around 285-ish. And the final one I just wanted to highlight here is Google. Google is also picking up nicely. It's actually been under pressure since it had been under pressure in early October. After its earnings report, it had a bit of a trading bounce, and it's still been kind of working its way lower. Now, in the last couple of days, it's broken out of a 4-month downtrend. We've seen a real acceleration and upward momentum on the RSI. So it's picking up pretty strongly here heading into this earnings report. It's back. It had found support around 490, screaming back above 500. The breakout point or first test would be about 520. Resistance here at 550 to 560, and then the next area up is about 590 to 600. So we are seeing Google start to attract some attention heading into its earnings report as well. So we're looking at a big week for trading coming up, not only with some significant news coming out on the central bank side, also a number of economic reports, and finally we've got a ton of earnings reports, a lot of big names reporting. So it looks like another active week for trading.